Well, to provide investors with capital growth from a portfolio of companies involved in the precious metals sector. That is the objective of Golden Prospect Precious. Take two. Right. So you keep looking at me. I'm the only one that looks at that camera. You keep looking at me. All right. To provide investors with capital growth from a portfolio of companies involved in the precious metals sector. That is the objective of Golden Prospect Precious Metals Limited, and I am joined by the portfolio manager, Robert Crayford. So Robert, Golden Prospect Precious Metals Limited, how long has it been going for, this fund?
It's been running for 10 years.
And how successful has it been over 10 years?
Well, it's been a volatile time, obviously, with the gold price, and we're obviously exposed to precious metal stocks. So we've ridden the ride, but we're feeling positive.
So you've been going for 10 years, and how different has the last 2 years been to the rest of the term of the fund?
Well, yeah, obviously the last 2 years has been a little difficult, as we've seen the gold price fall, but we've managed to reposition ourselves in companies that generate strong cash flow, and we feel quite well defended against the weaker markets, but also have elements of the portfolio that should benefit into the recovery that we anticipate.
That you anticipate? That's extraordinary. Yeah. So are you calling the bottom of the market then?
I don't think anyone can call the bottom, but it's definitely feeling like we are certainly closer. I mean, there is very little investment going into new mines, and all this focus on the US rate hike. We have to wait and see what happens, but I can't see rate hikes forever.
Okay, so you're repositioning yourself. So when you say repositioning, what does that mean within your fund?
Well, I mean, we're focusing on companies that can generate really good cash flow, have benefited from cost savings such as declining currencies, wage benefits, and also the fall in the oil price.
So tell me about your holdings, who you're keeping your eye on and keeping them close at the moment.
Yeah. Well, I mean, you can see our top position in the fund is a company called Klondex Mines. So that's a 360 million Canadian company, but it's actually based in Nevada, and it's actually one of the highest grade mines in the world currently. Currently running around sort of 16 grams per tonne is their head grade. So it's got a very low cash cost. It's protected against any sort of volatility in the gold price, and it has zero debt, and it's generating good cash flow.
And will this be a long-term investment for you? I mean, what's the average life of an investment for your fund?
Yeah. Well, I mean, this is very much a longer-term strategy fund. We buy companies we like, companies where we believe in the management, and companies that we intend to hold for a long time. It's not a trading portfolio.
Right, okay, so this is a long-term fund in a very volatile sector. So has it been successful, this strategy of yours?
Well, I mean, I think so. If you look around, I mean, there's a declining number of resources funds out there, given that the pressure that we've had. I mean, the US dollar headwind has obviously hurt a lot of people, but we feel comfortable. Our performance, has moved with the market, but we think that we've held up pretty well relative.
Okay, so you've just told me there that there are less competitors within your sphere, so therefore there must be more opportunities for you. If there's less natural resources funds, there's only a few of you around. Yeah. So is there more choice for you?
Well, I mean, I think it's more the opportunity we give to investors, because, I mean, as a UK listed vehicle, we freely trade on the market. I mean, it gives a UK investor with a UK listed stock exposure to global gold mines all around the world, and silver. We feel the benefit there, but I mean, we definitely see a lot of opportunities on the equity side from our perspective.
Okay, you've also got holdings in Fresnillo. Talk to me about that holding.
Well, I mean, Fresnillo is one of the lowest cost silver producers in the world. They're based in Mexico, so again, they've seen currency benefits. But we're very comfortable with the companies like that, which are top quality companies, can survive through the cycle. So even if we do see some nearer term volatility, we feel very comfortable and safe within that company. But at the same time, it gives us the freedom to then look to add companies that can add more torque going forward. But actually, as a silver producer, that has more torque than the average gold producer, just down to the nature of the volatility of the silver price.
Okay, now talk to me about your typical day. Do you come in and automatically look at the gold price, the silver price, or any comments being made from Janet Yellen about the potential direction of US interest rates?
Well, I mean, we have to look at everything. I mean, every element, every bit of geopolitical news, all has an impact on what's happening. The gold price is just a response to those. I mean, the US dollar is probably the biggest issue at the moment, although I kind of believe that generates far too much focus, and I don't believe people should focus on gold in just US dollar.
Okay, you're also exposed to diamonds. What's the outlook for the diamond commodity at the moment?
Yeah, I mean, the diamond industry is an interesting one. We've seen some weaker prices nearer term in diamonds. But at the moment, De Beers are trying to market diamonds more and trying to push it more into the Asian market. So I mean, if you go back half a century when De Beers started to market diamonds, and they were so successful in getting the Western world and the invention of the engagement ring, if they can start to get that to feed through into the Asian culture, then the sky's your limit. But at the moment, diamonds are slightly under pressure, which is why we've got it as a fairly small part of our portfolio.
Okay, so you told me that you're a long-term fund.
Yeah.
Have you ever had to quickly pull out of an investment because you just thought, well, that was a surprise, but this has got nowhere to go? For example, you might have delisted from AIM and you've had to quickly withdraw.
Yeah, I mean, of course. I mean, that always happens in mining. You know, you are able to invest on the facts that are presented in front of you, but when the facts change, you have to be ready to make that decision very quickly.
Holdings, are they mainly in AIM-listed companies or small and medium-sized companies?
I'd say small, medium size. You know, we like to keep a level of liquidity so that we can have that flexibility to move around if we need to make those quick decisions. But actually going forward, when we feel a bit more confident in the market, it's the smallest guys that are going to move the most. So we will look to be reallocating more into those.
Okay. Remind me about your investment criteria. What do you apply? What are your metrics?
Given that the market has been more tricky, one of the things that I really focus on is companies that generate cash flow and can survive themselves, or have good balance sheets and really top quality assets.
Okay, so in a nutshell, you are watching the direction of the US interest rates, you're watching the currency, you're looking for the cash generation of the companies that you invest in, and you're long term. What about the people that invest in you? What type of shareholders do you have?
I mean, we have a whole mix. We have quite a large weighting from private client fund manager houses, so we have very close relationships with some of our larger shareholders. We also have a big retail element, but we really want that to be much larger.
So how are you going to get them on board then?
Well, hopefully by doing more things like this.
Very good. Robert Crayford, Portfolio Manager at Golden Prospect Precious Metals Limited. Thank you very much indeed for joining us.
Thank you.